Good morning, Predicted Trades family. Hope everybody's doing well. Hope everybody had a great weekend. Let's start with a little bit of review. Last week, we had FOMC. And we were basically just in a range. Looked a little strong on Monday, a little weak on Tuesday. FOMC was that crazy ride down, back up, and down again, setting up a new trend to head lower out of our range that we started the week. That carried down Thursday and Friday and got us right down near our previous low of year, 36.39. We did not quite get there on Friday, made it down to this 36.68 key level, caught a bounce there, and now we are settling at that level pre-market. Before we dig into what we could get on the day, let me pull up the economic calendar. Sorry, hold on one second. Let me get that pulled up. There we go. So this week, we've got a little bit going on. I saw we have Powell talking on Wednesday. I thought I heard maybe Tuesday as well. Yeah, Tuesday. Today, we have a little bit coming out of Chicago Fed. We've got some Fed speakers kind of throughout the day. Tuesday, we have Powell at 7:30. We have some economic data at 8:30. Durable goods orders, core capital, and some more Fed speakers. Case-Shiller, U.S. price index, 9 a.m. before the bell. Some home price index data. Consumer confidence index at 10 a.m. on Tuesday. Wednesday, we've got trade in goods, some Fed speakers, pending home sales, Powell on Wednesday, so Tuesday and Wednesday. Thursday, we have our normal jobless claims, some GDP data, and still more Fed speakers. And then Friday, PCE price index, consumer spending and disposable incomes, University of Michigan, and yet more Fed speakers. So nothing crazy, but definitely some economic data and a whole bunch of Fed speakers. Next week, we can look forward to, let's see, some manufacturing data, a little bit of jobs data, ADP, employment report, a little bit of PMI, initial jobless claims, and NFP, non-farm payroll, along with unemployment rate and some labor data. So that's all next week. Now let's talk about where we can go for today. We are we are going to be opening with a 30-minute and a 1-hour squeeze in place. So luckily we have a little bit of range for today. And as we like to teach, play that range until it breaks. Let's see if we can hold 36.68 in the bottom of the squeeze. We also have that third Keltner to the downside at 36.56. Couple of levels that could hold us up before getting down to test this 36.39 low of year. Now that we are here, when I say low of year, it's also the June lows. You know how everybody online is talking about return to June lows. We are pretty much here. So, question is, can this 3668, this third Kelton to the downside, hold as a zone of support in the bottom of this 30-minute squeeze to start to send us back up and get through our trend line from these recent highs since FOMC? If we start to give out those levels at the bottom of the squeeze, we do have a low of a year at that 3639. We have a cycle level of 3600, and I have a little tiny zone of support that I drew here from some previous wicks back in 2020 that were very interesting. So, well, let's see if we can hold, squeeze bottom, try to get back up to 3700, 3708, and 3715, where we just rejected every time we got to it on Friday. Set up a rejection here and here, and I think that maybe, yeah, either way. If we can get through 3700, 3708, 3715, and 22 at the top of this squeeze, first stop is at 3741. Last spot that we rejected pre-market on Friday. And then past that, 3773, where we tried to hold up on Thursday. So we've got our targets to the upside, targets to the downside. Should we start going past 3600 and this zone of support, next stop would be 3541. In Q. Same deal, we are arriving at we have a 30-minute and 1 hour squeeze going into today. We have a slight uptrend from late in the day Friday that we're holding up. And we have the same downtrend that I'm going to slightly update here to this pre-market high. There we go. So coming into the day on a wedge. Let's see if we can hold wedge bottom, the squeeze bottom, and this 11,197, called 11,200. If we can hold there and start to catch a bounce up, first stop getting through this trend line from these recent highs, in a bid to get back to 11,400 where we topped out last night when we opened, and where we topped out this morning. If we can get through 11,400, next stop that cycle level of 11,500. And ultimately trying to get back to this 11,677 where the daily 8 sits as a first stop. If we start to give out at the bottom of the squeeze and take out 11,200, next stop 11,068, and then cycle level 11,000. And then after that, if we do dip below 11,000, it's 942. Ready. Drew a zone of support that is a little wide, right? I'll admit it. It's from 1700 almost down to 1600. It's a bit of a wide zone. But basically, this zone represents before COVID, where we kind of topped out. This range where we topped out and then COVID hit. Then we got back to it and held under that midline for a little while to consolidate before finally taking off through it. Our previous low of year got down to this zone, set a slight wick lower at, what's that? Come on. 1640. So ultimately we are back at this zone. Basically looking for ready to settle and hold up at the midline of this zone, previous low of year, and start another bounce, which would kind of be an expanding megaphone, right? If we start to give out this zone in 1600, then we are talking pre-COVID levels and taking those out. And I mean, obviously some of these COVID levels are fighting back up to it. So I know it's a bit of a wide zone. I don't usually draw them that wide, but the top and bottom are part of that range before COVID. So it's something I want to keep an eye on. And I will likely drop some other key levels in here should we start to give out that middle, which could happen today, you know. So ultimately, let's see if we can hold 1656, 1650 psych level. If we give that out, likely coming down to 1620, 1615, psych level 1600. But if we can hold here, start to catch a bounce back up. First stop, 1680, 1700. And all in a goal to get back to 1750 where the daily 8 sits first. YM. Down near the third Keltner, we have a squeeze as well on all indices, right? So we've got our range to work on today. Let's just, for the sake of argument, go grab some levels. So YM already set, new low of year. Something to keep an eye on. We'll mark the previous one. We'll mark the new one. We can see that the new one kind of overlaps with this wick back here, this top over here, and we're back at COVID levels. So if we start talking any lower, we can mark a couple here. All right, let's go back down. So let's see if we can hold this 29,315. If that starts to give out and the bottom of this squeeze, we've got psych level 29,000 and the key level I just grabbed at 28,846. If we can hold up at this 29,315, we can get back to previous low of year at 29,639. 29,800 at the top of this squeeze and psych level 30,000 where that second Keltner sits. We have tapped the third Keltner. It now sits at this key level 29,315 in the bottom of the squeeze. Let's see if it can provide support and start a little Monday rally. If it gives out, we know where it's going. Apple. We settled at this key zone for the pop up into FOMC. Now we're back at this key zone. We have not quite completed the H of the low that we set in the middle of this zone. And just for argument's sake, going to market so that we know, come on, where completing the H is in the middle of that zone. So let's see if this zone can provide support. 149 we can call it, and 147.5. Looks like the second Keltner sits there as well, and ooh, we've got a daily squeeze popping up on Apple right below that key level. I like that. Last time when we were back at low of year, we did not have daily squeezes to help bounce us. Now that we are back, some daily squeezes are starting to pop up on a number of names, so it's something we want to keep an eye on. So let's see if 147.5 can hold us in this zone that we are settling at. Goal of getting back through 150. 152 at the top of this 2 hours, 1 hour squeeze, sorry. And through 152, looking to get back at this zone above, where our daily 8 and daily 15 sit around. AMD broke down. Underneath third Keltner, tight squeeze. Chips need a break. We do have MU at the end of the week. We could see, if the market rallies, we could see some rotation into chips with MU at the end of the week. They could play all chips, in a sympathy play as a rally into earnings. Not saying that there's a lot of cause right now for earnings to go well this season, but we'll see. Earnings season is about to kick off at the end of this week, with MU being the first chip and kind of the first in tech. So pretty easy, or pretty simple on AMD. Play this range until it breaks. If we start to give out the bottom of the squeeze, go into 65, and each dollar increment. If we can hold 66, get back above 68, first stop that psych level of 70,000, and then trying to get back to that second Keltner and daily 8 up above. Amazon down at third Keltner as well. Let's see if 112 can hold. If not, 110, 108. If we can get going back to the upside, got to take out 114. We'll call it 115, really. And then that second Keltner at 117, the daily 8 and first Keltner up at 120-ish. BA down near third Keltner, down near 130. If it keeps slipping, psych level 125 below. If we can hold, and looks like we're hovering like right at the lows of Friday. So let's see if we can hold, get back above 132.5, 135. And a bid to get back to 140, 142 where the daily 8 sits. Cat slipping lower from our key level down to third Keltner and the psych level of 160. Any lower than 160, 155, 150 big psych levels. If we can get going back to the upside, we're going to get back to 170 where that second Keltner sits, and then 175 where the first Keltner and the daily 8 MA sit. Google. It's going to be the same on a lot of these. We're down near third Keltner. Let's see if we can hold there or the next psych level. Google, looking to get back to 100, 101.5 where the daily 8 sits, and the top of this 1 hour squeeze, 2 hour squeeze, sorry. And if we can get through the daily 8 and that 2 hour squeeze top, then it's the first Keltner at 103. We've got our mean sitting up near 105. GS. We have a daily squeeze in place, but we are down below it, and it's should be firing actually. We're at a big key psych level, 300 on GS. Let's see if 300 can hold. If not, 295, 290. But if 300 can hold, we can get back to that 308, 310, where that second Keltner sits, and then back to 320, 318, where the daily 8 and first Keltner sits. Like on a lot of names, we could have just a day or two pop up to the daily 8 for further continuation down as we near these low of years. JPM. We do have that big 2-day and 1-day squeeze intact. Any lower, we've got that third Keltner at 105.5, 105. See if we can get back above this 2-day, 1-day squeeze bottom, back to 110. Then 112 where the first Keltner sits, 114 where the 113 where the daily 8 sits, and then we have our 21 and 50 all sitting up around 115.5, 116. Meta. Daily squeeze has opened up to release. We got our third Keltner down near 136.5, psych level 135 if we keep slipping. Let's see if we can get back through 140, 143, and a bit to get back to 145 at the top of this 2-hour squeeze. The daily 8 should be around there as well. And our daily 21 up past that psych level 150. Microsoft coming up on a key level, that's 232.86. Has a bunch of squeezes in place, so let's see if that can provide support at last week's low, 235-ish. If we can hold there, looking to get back to 240, 242.5, 245. You can see those squeezes stacked up there. 240, 242.5. And about 245 would be your 1 hour, 2 hour, and 4 hour squeezes. The daily 8 near that 244. The daily 15 near that psych level 250, and 21 near 253. Netflix. One of the stronger names in this drive up into FOMC. Obviously taking a break. Yeah, we'll connect to this guy right there. We go. Pulled back to our daily moving averages and then gave them out on Friday, making it down to that first Keltner. Let's see if Friday's low, that first Keltner down around 220, can hold us. I talked about this last week, and really the week before, we approached the bottom of a 1-day and 2-day squeeze. We caught a bounce at that first Keltner that sent us up through our means almost to that second Keltner and the top of the daily and 2-day squeeze. And then we reversed. So if we do see more downside in this market, and in Netflix, could get back down to the bottom of that daily squeeze and catch a bounce. But pretty much made it back to that first Keltner, so we could bounce from here. Let's see if we can hold 220. Work our way back to the daily 50 at 228, the daily 21 at 232. If we can get through this trend line, then it's back to our levels that we were at last week at 240, 45, and 50. If we give out that 220, back to that 215, and potentially that second Keltner down near 210 in the bottom of these squeezes. Nvidia down near 122. Near that third Keltner, which sits around 121. We have our squeezes in place. Going to be keeping an eye on Nvidia this week, just in case there is a little bit of rotation into chips in front of MU earnings. Let's see if we can hold 122, last week's low, bottom of the squeeze. Past that, psych level 120 where the third Keltner sits. And if we can start getting back through 126, our pre-market high, which was above Friday's high. Looking to get back to 128, where that second Keltner sits, 130 where the daily 8 sits, 134 where the 15 and the first Keltner sit, and our daily 21 up near 140 in this FOMC high. QQQ made it down to third Keltner, trying to hold it pre-market. Well, I assume it's going to step down a little bit. Let's see if the bottom of the squeeze 272 can hold. If that gives out, first stop 270, 268, 265. But if we can hold here, start to get going back through 276, pre-market highs. First stop, Friday's pre-market and cash session highs around 278. Psych level 280. Our daily 8 is up near that 285-ish. Daily 21 near 295. SPX. Do have a gap. Always mark your gaps. We have an unfilled or unfinished gap from Friday. We've arrived back at some key levels here. Let's see if 36.45 can hold. Friday's lows were near there, but did not quite tap it. We are below third Keltner. So let's see if we can hold 36.50, 36.45, work our way back through 3700, and get back to fill this gap to 37.52. Our daily 8 sits up at 38.25. If we start to give out these lows down to 3600, 35.87, and then a zone of support near the psych level 3500 and 35.23. SPY. Let's see if we can hold Friday's lows. If they give out, probably down to 360 for a test. If we can hold Friday's lows, 363, 365, and push back up. First stop 270 at the top of the squeeze, 370, 374, big key level that we tried to hold after that FOMC drop. And then past that, the daily 8 is up at our 381, 380. Daily 21 almost stepping down to this 388.42. And as you can see, for most of last week, we were just stuck in between those key zones. So let's see if we can hold and get back to them. If not, starting to slip to 360, 355, 350. Tesla. Again, another strong name near the top of a daily 2-day squeeze. Perfect short, back down to the bottom. So arriving at the bottom of the squeeze, already setting a new low from last week. Let's see if this second Keltner, which will be around 267 today, and this squeeze can hold, psych level 265. If we keep slipping, we've got our third Keltner down near 357, psych level 257, psych level 260. So let's see if this second Keltner and bottom of this daily 2-day squeeze can provide support, start to bounce this back up. First stop, we got to take out 280, kind of the highs from Friday after the drop, and the pre-market high. More like 279, sorry. We can take out 279, 280, looking to get back to that daily 50, up near 285, 287.5. And then past that, we've got all of our moving averages stacked right at 292 to 293. We still have POC up at 300. So if we are going to see the market catch a bounce this week and not just dive and set new lows, since a lot of things are at third Keltner, you can see right here, lots of names at or under third Keltner, which is usually when we're getting into oversold territory. So if the market can bounce this week and start to recover, Tesla's going to be in a great position to play right back up to moving averages and POC off the bottom of this 2-day squeeze. But since we just set new lows, let it settle, start to form a good pattern, and then turn back up would be some good longs this week. And if we look at some Tesla calls this week, I'm sure we're probably going to be near our buy zones. UVXY got up above this 1 day, 2 day squeeze, which are still intact. So we could see a quick snap back. We can obviously keep bumping. So for downside in the market today, we are likely going to see UVXY continue to pump up. Hold above the second Keltner, which is at around $12.10. Push up through 12.5. Friday's high, 12.75. On our way to 13, where the third Keltner to the upside sits. If we can start to see some upside in the market today, we need UVXY to get back below 12. Make its way back to 11.5 and 11, which was the resistance at the highs. But ultimately, for upside this week, need to see this get back down below 11 and to this zone in the daily 8, with the daily 21 and 50 sitting down around 10.4. VIX. VIX. On Friday, took off from that 28. It made it up to 32. On FOMC, we did shoot all the way up to 30 and then back down. And with Thursday, it looked like we were going to kind of give out, but we held 27 and bounced right back up for further continuation. Yeah, I want something extreme. There we go. Drawing a little bit of an extreme trend line just to kind of get our first signs that we could see some decent upside this week, which would be with VIX getting under 30. So anyway, for further downside in the market, VIX will likely hold this second Keltner around 31.5. We've got a cycle of 31. So if we're going to see downside in the market, we're going to bounce at one of those, 31, 31.5, the second Keltner. Take off from 32, set new highs at 33, get to 33.5. And our third Keltner sits just a hair beyond that on the way to big cycle level 35, 35.28 for further downside in the market. But if we're going to see a decent bounce, we need VIX to get back below 31 and 30 and make it back to some of our key levels here. The daily 8 at 28.5. The daily 21 and 15 right below 27 at 26.5 now. Back at the lows where we kept bouncing last week. So that's it for today. Hopefully this was helpful for everybody. Thanks for tuning in. We'll see everybody in the chat today. If you're new to Predicted Trades, there's a link in the description to join our Discord where you can come and learn more about us and our system. And thanks for tuning in. Have a great day, folks.